what exactly are discount points and when should I utilize those?
Yeah. So when you're talking about interest rates with your lender, there's a sliding scale at any given day. We have what's called a par rate, and that's the rate that you could get without paying extra or getting a credit, right? If you want to pay extra to buy your interest rate down, that's called a discount point. And the cost to do that varies from loan to loan. It's based off the loan amount. And so in some situations, it could cost you, let's say, a couple $1,000s to buy your interest rate down a half a point. When rates are average rates, let's say you have a decent rate, let's say it's a 6% rate, and rates might come down to 5% a year. It's not a huge difference. So in that scenario, I might encourage you to buy the rate down if you can afford it. When the market is like it's been for the past year, when we've had 7-8% interest rates, and if you're buying right now and you're guaranteed to refinance in a year or two, I don't recommend paying extra to buy the interest rate down because you're going to be doing that twice. You're going to be doing it initially and then doing it again when you get a lower rate when you refinance. So why throw that money away twice? Just stick with the higher rate and refinance in a year or two, right? But on the other spectrum of that sliding scale is what's called a lender credit. So depending on how your cash to close situation works out, you could get a slightly higher interest rate, but you could get a lender credit from us that gets applied to your closing costs. So you pay less upfront for a slightly higher interest rate. So the scale goes both ways.
I really do appreciate that answer, Nick. I think it illustrates, defining some of the jargon in our industry and really drives home the point that it pays to talk to professionals.
Yes. Every situation is unique. Do not rely on Google.
I'm gonna quote you on that one. Thank you, Nick.
Yeah, thank you.